Good evening, friends. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out India, Singapore, and Hong Kong. Unlike the great companies like MTM, Ola, Uber, Swiggy, Zomato, Byju's, Delivery, and the list is very long, by the way. We never claim to be a unicorn. Because one thing we are completely aware is that the definition of unicorn is flawed, rather misled. History is a witness that the global markets never understood from frauds like Madoff, who run who was running our biggest Ponzi scheme since years, and people failed to recognize that. Sincerely failed to recognize that. And now we are into another trap, and this is called unicorn trap. So Treasury Consulting never claimed to be a unicorn. But yes, all legal entities of Treasury Consulting are 100% profitable since inception. And we are a cash rich company. So, common sense is that being a cash rich company, what would be our valuation? And as an organization, we hardly bother about our critics because the media is sold, the system is compromised, the regulators are compromised, so we hardly bothers. As an organization, we are a multinational hedge fund. By a multinational hedge fund, I mean we are a fund who invest within and outside Asia. Now, when we say we are a fund, we are proprietary. Now, being proprietary means that no third party capital is invested. Whether it's a third party investor, it's a private equity, it's a venture debt, or any form of investment. No third party capital is invested. So, whatever positions we are taking as a hedge fund, these positions are backed up by our own capital. So, example, today we are taking a position of $100. Example, these $100 are backed up by our own capital. So, tomorrow we are taking position of $1,000, assuming these $1,000 are backed up by our own capital, so on and so forth. As a hedge fund, we invest in FICC segment, which is fixed income, currencies, and commodities. And of course, we would continue to increase more asset classes in our portfolio. It's a matter of time, to be very honest and precise. But having said that, we love to have more and more equity and equity related exposure, of course, proprietary in a given period of time. Our fund is 100% profitable and would continue to be. Apart from that, Treasury Consulting having interest in other revenue streams, like we have our private news desk where we covering news of financial and non-financial. I said news and knowledge. We have our learnings academy known as Sheetal Academy. We have our trainings platform as we speak. Near about 200 plus trainings are live. We have our consulting business. We have our private placement programs. We have our family office desk. We have our pension fund desk. We have many more product lines, and many more product lines are coming. Let it be honest. And one thing we are very clear and we are certain and would continue to be, which is that unlike Paytm, Ola, Uber, Swiggy, Zomato, and all such great companies, we never work for losses. Straight. Because I believe in a simplistic formula of Steve Jobs, which is you have to work for profit. Make your product so competent that you get profit rather than work for losses. Today, I am highlighting second challenge to a legacy based TMS, Treasury Management System, known as Murex. And of course, I need time because there are many actions which are going parallel. Eventually, we would be making so much challenge before our Murex. You just wait and watch. This is Rahul Magan from Treasury Consulting Group. You know my personal number, which is +91 9899 242 978. +91 9899 242 978. Alternatively, you can have our back office number, which is +91 9818485155. 9818485155. Have a great time. See you in the main part. Welcome to part 1 of the video titled Open Challenge to Murex. And this is the second challenge which we are throwing before a great company called Murex. You know, the Murex philosophy, I tell you, Murex philosophy is very simple. And this is not the Murex philosophy. This philosophy is adopted by many companies of the world. Whenever you upload a video about Murex on YouTube, probably on the social media, they have a legal team based out in India. I don't name the law firm who is covering the Murex, and they send you a legal notice and they threaten you. 99.9% people, I repeat, 99.9% people frightened and they take a step back. Because these law firms are very big. Only name. Knowledge is zero. Only name. But these law firms do not know there is somebody known as Rahul Magan who can challenge Murex on a social platform. Well, this is Murex philosophy. And this philosophy is very clear. So when you open YouTube, you type Murex, you will see that no people made a video on Murex. Because whosoever tried, he got a legal notice. and people took a step back. But I assure you, I would be throwing so much challenge before a Murex that they failed to answer them. And today I'm throwing yet another challenge. Now, this is part one of the video. I need one more part to cover the whole story. Market is very volatile. There is no doubt about that. Thanks to Russia, the market is getting more volatile. Because of the Russia, the implied volatilities across all currencies, whether it is GBP, Euro, Japanese yen, Australian dollar, New Zealand dollar, probably all currencies, whether they are direct pairs or indirect pairs, they are up. I am saying implied volatilities are up. Now, what the hell is implied volatility? Those who do not know, although I covered this many times on our YouTube channel. Implied volatility is nothing but the expected volatility of a currency pair, rather an asset class. It could be commodity also. It could be crypto also. It could be fixed income, or it could be any other IR derivatives. So example, take GBP dollar. Today, 1 year GBP dollar volatility as I speak is near about 11%, which is fairly high. I would say fairly high because it used to be 5%, 6%, somewhere in that range, which is okay, not a bad thing. But now it is 11%. God forbid, if Ukraine falls, only the time would tell, then that implied volatility would be, oops, 20%, probably more than 25%. Now, these implied volatilities which you have, these implied volatilities impact the currency valuation. They do impact the currency valuation. Why it do impact the currency valuation? Because all the big players, those who are taking positions, example, hedge funds, mutual funds, sovereign wealth funds, the government organizations, the depository institutions, the ECN, electronic communication networks, high frequency traders. You have the proprietary traders, the big G7 banks like Goldman, JP, and all. And more than what I mentioned, they completely rely on these implied volatilities for the pricing. So today, example, if Goldman is taking a position in GBP dollar, say 1 year down the line, then they have an implied volatility in their pocket. When I say in their pocket, that doesn't mean it is fixed. It means they computed it. Now the problem is that implied volatility is either coming from their own proprietary system, because the big banks like Goldman, JP, and all, they work on their proprietary systems. They are big bank guys like Goldman having a derivative book of $1 trillion. So one bips on $1 trillion is 100 million, which means if Goldman fail to correctly estimate 1 bips, they would be losing 100 million. So if Goldman failed to estimate 20 bips, assuming, they would be losing 2 billion, which is a huge amount. It can swing their P&L like what the hell? And they are answerable to their investors. They are answerable to the analysts who are covering Goldman and so on and so forth. So they have their proprietary engines. In a later stages, we would be covered more about proprietary engines. But having said that, these proprietary engines are subject to huge interpretation issue. But who cares? And Goldman is right, because by the time they are market maker, which means one side they have buyer, another side they have seller, in between is a Goldman. I repeat, one side they have buyer, another side they have seller, in between you have Goldman. Goldman hardly bothers, because they are getting the business. And this, I think, should be the forte of the business, which is you getting the money, you getting the business. Simple. But when it comes to option pricing, because in currency market, options play a very important role. Of course, in India, people hardly bother about options. In India, the definition of options is call and put. But globally, that is not the scenario, because the definition of options are deliverable options, non deliverable options, exotic options, non exotic options, structured payoff, first generation exotic, second generation exotics, third generation exotics, with and without quanto structure, with and without ratchet structure, with and without basis swap structure, hell lot of things. You know, guys, the big banks like Goldman, JP, Citi, they all work on first generation, second generation, and third generation exotics. The live example is you go to their annual reports, which are called 10K. You will see they have the valuation hierarchy which is given, which is L1, L2, and L3. So they will give the amounts, they sum total it. But yes, when it comes to HSBC, I'm very happy, because HSBC gives a complete bifurcation of the valuation hierarchy, which somehow difficult to get in Goldman and JP Morgan. But they still give the data. That is okay. But having said that, the valuation comes from two sources. Number one, either it is a proprietary trading machine, which the big banks own, they can afford, they have the money, they have the quants, interpretation or no interpretation issue. That's a separate thing. Alternatively, it comes from Reuters or Bloomberg, which is again subject to interpretation issue. I'm not saying that whatever the pricing both Reuters and Bloomberg are giving, this pricing is completely correct. No, that is not at all completely correct. It is subject to interpretation issue. I raised interpretation issue to Bloomberg on their option valuation. And somehow, in an open forum on my YouTube video, they failed to answer me in an appropriate way. But still, now, guys, whatever the valuation you're getting of an option, whether it's a first generation option, first generation exotic, second generation exotic, third generation exotic, this comes in a system called TMS. TMS stands Treasury Management System. I have explained TMS many times on my YouTube channel, so please don't expect me to explain again. And the valuation which is coming of this option also goes to another platform which is called ERP, Enterprise Resource Planning, which could either be SAP or Oracle. So the option valuation which is coming goes to two places. Number one, the TMS, Treasury Management Systems. Number two is ERP, Enterprise Resource Planning. See you in part second of the video. Welcome to part second of the video, titled Open Challenge to Murex, Options Pricing. Guys, option pricing is a package. Now, what the hell is package? It's like a buffet. You go to a seven-star hotel, anywhere, you go to a seven-star hotel, and you will get a buffet. Now, in this buffet, you get vegetarian, you get non-vegetarian, you get lot of food items. Lot of food items. Now, the biggest question is what you like or dislike that hardly matters to that hotel. Hardly matters because he gives you a complete buffet and he charges for the complete buffet. So would be the sweets. After the dinner, you will pay, basically, the sweets are part of that. You get sweets also. Okay, that's very good. Now, you like the sweet or you do not like the sweet, that is your part. That is not the problem of that hotel. So similarly is the option pricing package. Now, when it comes to the option pricing package, it includes the plain vanilla options, the first generation options, the second generation options, the third generation options, the payoffs, the structures, exotics, and more important is the clientele option. Now, what the hell is clientele option? Clientele option means the option which a user can create. So on Reuters, I create the clientele options. This is clientele option, which means that the option pricing should have the capability to create these options. I again repeat, I may create clientele options on Reuters, but that doesn't mean Reuters is perfect. Pricing is always an issue in that regards. That is a very important thing. Now, unfortunately, what happened? People open Reuters. When say people, the banks, they create clientele option and they tell the client the pricing. Either it is net debit or net credit. And client hardly understand these things. Hardly. Client either agree to pay this or expect a tuned down approach. This is how it works worldwide. So India or any other country is not at all exception in that regards. If you are thinking they are exception, then unfortunately you are wrong. I got a working paper of Murex on the internet. Now, this is the working paper. I not derived from a third party source, so it is not a confidential. It is on the Google. So I got it from the Google. This is the title of the working paper, which means the landscape ahead, FX option desk, a Murex expert series. Now, one thing I'm very clear and certain, which is that the Murex expert is zero in knowledge. And I'll prove this and I'll give an open challenge in that regards. Now, if I go this article, then one thing which is very clear and one thing which thoroughly missed is the non-deliverable piece. Look like the Murex expert is not aware that the world, as we speak, we are very close to April 2022, few days away, is having 24 non-deliverable currencies, which includes Indian rupee, Philippines peso, Malaysian ringgit, Chinese yuan, Vietnamese dong, Indonesian rupiah, Pakistani rupee, and number of currencies. I cannot name one by one by one. And the volume of non-deliverable forward, or rather, precisely speaking, non-deliverable currencies is huge. It is huge. But in this whole article, it hasn't covered. But it is by Murex. Like I told you that Murex having a simplest philosophy. You speak and they send your notice. But they do not know that there are people who can challenge them and challenge these bloody law firms like this. There are two important things which we need to understand now onwards. Number one is the Basel 3 mandatory updation by 2023 October, which means near about 15 months from now or 16 months from now, Basel 3 is mandatorily live for worldwide banks, financial institutions, hedge funds, corporates, government, sovereign wealth fund, almost everyone. It is mandatorily live and should be. Should be. So when it is mandatorily live, there is a concept called XVA, which includes valuation adjustment. Now, X means the count, which includes CVA, credit valuation adjustment, DVA, debit valuation adjustment, FVA, your funding valuation adjustment. KVA. K doesn't mean that you might not knowing this. K means the capital valuation adjustment. MVA, margin valuation adjustment. Total 13. So in the interest of time, I'm not naming all 13. When Basel 3 would be mandatory for hedge fund, financial institutions, proprietary institutions, the big banks like Goldman, JP, and all, everyone are forceful pressure would come, which is called XVA. And all 13 XVA would get mandatory and should be, which, by the way, would impact the option valuation of any currency, whether this is GBP, whether this is Euro, whether this is Japanese yen, whether this is Australian dollar, or be it any currency, it hardly matters. But in this whole article, expert Murex, this whole XVA concept is missing. Whole XVA concept, which I told you just now, is missing. But this is by expert. That is why I raised this voice many times in the system that both Murex and Calypso are legacy-based products. Now, why legacy? It means that no one challenged them. And they feel that no one can challenge them. But they are wrong this time. Now, another beautiful thing is fundamental review of trading book. Fundamental review of trading book is coming live 1st January 2023. But there is a big catch. Previously, fundamental review of trading book supposed to live in 2020. But unfortunately, the banks were reluctant and then came the COVID. So it got deferred direct 3 years, 2023. Now, fundamental review of trading book, which is shortly known as FRTB, is live in 2023, 1st January 2023, which precisely means that we are near about 8 months away from FRTB. And I'm sure that banks are not ready for this. Banks are not ready for this. But Treasury Consulting would be having more videos in that regards very soon. Now, FRTB impacts two books. One is the banking book and one is the trading book. I'm not here explaining the difference between banking book and trading book, which I already did in my earlier videos on YouTube. So refer them. Big players, big hedge funds, big institutions, big banks, they take FX derivatives, which is shortly known as FXD. I repeat, FXD in both. Without quoting the name, they keep changing it. Banking book to trading book to banking book. Because currently we do not have such regulation which prohibited them not to make this happen. So they keep shifting, banking to trading, trading to banking. But after FRTB, this will pause, which would impact valuation. There are many things, capital floor, ceiling floor. I'm not covering everything in this video. But Murex not discuss that. Guys, a competent person always think beyond expectation, like Steve Jobs. A non-competent person thinks within expectations. And Murex is a live example in that regard. See you in the part 3 and the last part where we would be covering few important topics. Great time ahead. Welcome to part 3 of the video titled Open Challenge to Murex. FXD. FXD stands for FX derivatives. Now, this is the last part. I would like to challenge Murex because of the fact that as we speak, the big hedge funds of the globe, the high frequency traders, the big players, the depository financial institutions, the top insurers and all, they are moving from first generation option to second generation option. And if I look at the 10K of big banks like Goldman and HSBC, then one thing which is very clear is that they have hierarchy level, which is as per US GAAP 157. In IFRS, this is IFRS 3 and multiple. Now, it's also an evidence that the big banks are taking the option contracts where a considerable part is non-observable variable. Now, I'm not going to be defining what the hell is non-observable variable, because non-observable variable is defined many times by my video. Now, Murex, who claimed to be a king in TMS, Treasury Management System, and whenever you upload a video, they send you a notice because this is their USP, unique selling proposition, so that the globe will never get to know the true realities of Murex. Now, I would like to challenge Murex, specifically talking in non-deliverable currencies. 24 non-deliverable currencies, which includes Indian rupee, Chinese yuan, Philippines peso, Malaysian ringgit, Russian ruble, and many. Whether these non-deliverable currencies are priced appropriately in Murex. Now, when I'm using a word price, I mean to say the pricing is not coming from financial data reference provider. Now, what the hell is financial data reference provider? Which is either Bloomberg or Reuters. Although there are interpretation issues as far as their valuation methodologies are concerned. It's highly shame that on one side the world claims to be on artificial intelligence, machine learning, probably, NLP and all these fancy words. But when it comes to foreign exchange valuation, we are still 200 years back. And I hardly seen anyone challenging these institutions. And I keep repeating my words on the social media that mark to market accounting, which is MTM. Now, when I say MTM, I mean L1, L2, L3, all three. Mark to market accounting is one of the biggest and organized fraud by the accounting firms, because 99.99% investors never look at these figures. They only look at EPS, which is earning per share. More importantly, 99% investor even do not know how to compute hedge accounting, which standard of hedge accounting comes into picture, so on and so forth. Anyways, now if I go with this article, I would like to again repeat that the fundamental review of the trading book, as mentioned by Murex expert, is not correct, because fundamental review of trading book is all about the trading book and banking book. The bifurcation is very clear. So would be the valuation, and movement cannot be from one side to another. Secondly, if I go with these articles, they refer a fancy word which is called FXD, which is always a fancy word in our world, foreign exchange world. But how many FXD products you are covering? That's very important. You must be thinking that, you see, I have make a notes. Whenever I make video, I make a notes out of it. Now, if I go, like the barrier options, like the quant options, like the ratchet options, like the basis swaps, and there are a hell lot of products. How do you pricing it? That's a more important thing. Another important thing which I would like to highlight, and that's very important for TMS nowadays. Unfortunately, no one will raise the voice, but I do, which is hedge accounting. Today, I might price a plain vanilla call, or probably I might price plain vanilla put. But this is of no use because, of course, pricing is subject to interpretation issue from where the hell pricing is coming. That's more important. But having said that, after pricing, the most important thing which is coming in the picture is the accounting. So let's take a very simplistic example. If today Goldman Sachs, whether it is their client book or it is their proprietary book, whatever positions they are taking, that's supposed to be accounted in the books. It is not that Goldman keep taking the position, keep booking the losses or probably the profit, and no accounting is done. No, not at all. This is not possible. Accounting has to be done. Now, when accounting has to be done, it to be done using a standard principle, which is known as hedge accounting. Now, hedge accounting is as per US GAAP, as per IFRS. Both are completely different. And I'm not going to be elaborating this in the video. I did many times on earlier videos. Do Murex have the capability to price first generation, second generation, third generation FXD products, FX derivatives? When I say FX derivatives, please be careful. Don't just go to currencies because I know the strength of Murex. Secondly, do Murex have the capability to do the hedge accounting piece? Because that's more important. because until I do the hedge accounting, because guys, hedge accounting is dependent on valuation. Valuation is not dependent on hedge accounting. That's very important. You need to learn. Since valuation is not dependent on hedge accounting, vice versa is true. So if there is a bips flaw, I repeat, one bips flaw in the hedge accounting, in the valuation piece, it may end up either on the debit or the credit side of the P&L, which would hit your EPS, earning per share, whether it is diluted EPS, basic EPS, or the fancy, which is called adjusted EPS. This is really very important. But if you look at these kind of articles, which are available in the public domain, you feel like Murex is one of the finest treasury management system in the universe, not in the world, universe. I haven't touched TRF. I haven't touched DCDs, dual currency deposits, and there are a hell lot of things which it's pending to touch. But one thing is very, very clear to me. My understanding of treasury management system is beyond books. And these paid articles, paid not because of money, paid means the content is not completely verified. These paid articles is not going to deter me. Now, this is the second challenge which we are throwing before Murex. Probably in the later stages, we would be throwing more challenges to Murex. But one thing is very clear and straightforward, which is as the world is moving to LIBOR transition, as the world is moving to, I would say, the many new benchmarks are coming. We have Russia-Ukraine war. A huge volatility is happening in the non-deliverable currency pairs. Treasury management systems, TMS, cannot be a legacy-based product. And if you're thinking that TMS may end up being a legacy-based product, then I'm extremely sorry, because it cannot be a legacy-based product. And when I say legacy-based product, I am not referring to customization, because customization is a completely different thing, and I'll talk about this in a later stages. At the end, I would like to challenge the Murex once again and the so-called Murex expert. I don't know what the name of that gentleman or a lady. If you have the guts, if you have the technical knowledge, if you have the fundamental skills, if you really believe you deserve to call yourself a TMS, Treasury Management System, then my number is +91 9899242978. I repeat, +91 9899242978. Have a great time ahead. Thank you.